Hi, this is Tony Kiprios from Axiom Financial Group. Thanks so much for joining us today. In today's video, we're going to discuss the recent stock market volatility and a few key tips to think about as we go through this volatility. Thanks so much for joining us today, and stay tuned. Here in May 2022, there has been a significant amount of stock market volatility. Depending which index you look at, the stock market has been down year to date over the past 5 months between 15% and 30%. Also, individual stocks, major companies that you probably know, such as Apple, Google, Facebook, Microsoft, and a whole host of others, are down between 15% and 50% plus, depending which stock you're actually talking about. This is a significant amount of stock market volatility. Now, when thinking about the stock market volatility, there's a few main tips that I think are important to think about when prices and stocks are falling. The first tip is that typically the best time to buy or increase your stock market allocation is when prices are falling. So now with the markets down significantly and in a quote unquote bear market, it could be a great opportunity to increase your stock market positions, rebalance your portfolio, and start to buy a little bit of stocks with a caveat that you don't know exactly when the stock market bottom will be. But the goal is to start picking up stocks that you like or stock market indexes at different prices, and it's a great time potentially now as the markets are down 15 to 30% plus from where we started at the beginning of the year. The second key tip is do not panic sell. A common theme amongst retail investors, which is typically the exact opposite thing to do, is to panic sell. What does panic sell mean? It means selling your stocks when the prices are down, when your portfolios are down, when it's a recent market downturn or bear market. Retail investors typically have an idea or a want to sell their stocks. But actually, it's the worst thing to do. What you want to be doing is start to rebalance and start to accumulate more stocks. Because again, the goal is to buy low and sell high, not sell low. So the second tip is do not panic sell. The third tip is look at other ways to invest your portfolio that aren't just stocks and bonds. You can look at your private market allocations, your alternative investments, and see how have they done during the stock market crash. Have they held up? Have they stayed even? Have they lost money? Have they made money? As you remember, a lot of the stuff that we do here at Axiom Financial Group is with private market funds. And I'm very happy to report that many of our private market funds that were supposed to be uncorrelated to the stock market do well when the stock market fell. They've actually done really well. Look at private market alternatives as a way to incorporate into your portfolio to decrease the risk and the volatility and balance when stock markets are in a bear market or a tough period. The fourth tip is reassess your risk tolerance. Risk tolerance is a very interesting word, and a lot of people like to discuss it, but essentially they say, if I'm making money on the upside, my risk tolerance is high, but when I'm losing money, my risk tolerance is low. Unfortunately, with risk tolerance, you can't have your cake and eat it too. You have to decide what type of standard deviation are you comfortable with. And risk tolerance really means to the downside. So when your one stock in your portfolio is down 50% in 5 months, or your S&P 500 index is down 18% in 5 months, just for example, how do you feel when that happens? Now, of course, nobody likes it, but is it something that keeps you up at night? Is it something that it really scares you? Is it something that you say, if I could not have this type of volatility, it would make me much more happy with my investment portfolio? These are the type of concepts that really only get fleshed out when the stock market is down or whatever investment you made is down, because that's when you really start to understand your true risk tolerance. Because it's easy to say risk tolerance when the markets are just going up for 5 years straight, but it's actually when you start actually quote unquote losing money that you start to realize, am I comfortable with my risk tolerance or not? So those 4 tips are 4 things that I thought about during this stock market volatility, and I just thought it was a great reminder of the appropriate ways to act during a stock market volatile period such that we are in, because it's important to not make common mistakes that sometimes can be actually detrimental to your financial success. So again, thanks so much for joining us today and learning about a few tips to deal with stock market volatility. Thanks so much for joining, and please stay tuned for our next video. Take care.